Hello traders, I wanted to make this video today of my post-trading session so that I can go over why I was looking for shorts today. I know that a few of you were looking and thinking long, and for those reasons I wanted to point out the reasons why I went short and why I took the trade to go short. I normally don't do this when I have a winning day. I only do it when I just have a lot of losing trades in the day or just felt like I was fighting the market the whole time. I do like to go back and revisit and do a post trading review just to make sure that I was on my trade plan and it was just complicated day or if I mixed up the order flows. Sometimes that happens when they're really close together. You you see the immediate order flow and you take something when that overlaps into the longer term order flow, and it just creates a little bit of a confusing process here. But today, the reasons why I took short, and I can understand the reasons why you all were probably thinking long, was because we had a new structure high from this level here. That's probably one of the reasons why you all were thinking long. Pardon me. So here we have a clear swing, clear high, clear low, lower high, and then a short-term new structure high. This was the long I took yesterday, and the reason why I was thinking long is because we had good volume, and the bears seemed to die off. And although the bears did come back, and there was accumulation on the bears, overall this is a market that, in the grand scheme of things, this is just a long, higher low in this huge monster swing that we had last week. But that's a different situation altogether we're talking about today. So when we came in, what do we see here? We see a complex correction to this lower high. We see that the bears just really struggled. I had a feeling that price would get to the 2100. If you look across, that's exactly where it got. And then the market rolled over, produced a new structure low. So this is the main swing that we're looking about here. So anything below this low and this high, we're talking about a complex corrective process here. The expectation is for a new structure low. Now, granted, price came down here and was unable to do so. Made a short-term new structure high, complex correction. The market rolled over and tested the low again and was not able to. And it came up to retest the high. So now we have price action, retesting lows and retesting highs. Okay, in essence, we're in a range bound market. Okay, we have price respecting off of a good attack. Okay, this structure boundary here, and then the bulls were unable to capitalize on that and make a new structure high off of this relatively acceptable pullback to an area of structure. Okay, now when you stop for the day at this point here, you have to ask yourself, okay, where is the volume? Okay, and what is it doing? Okay, is price accumulating with volume? See, like here, it's accumulating. There's volume, right? There's accumulation, but it's not going anywhere. Why? Because sometimes it takes a while for that imbalance to come in. But once it does come in, we see what happens. We see it many times. We even see it on a short-term scale. When that imbalance comes in after the accumulation, price does this. Okay, price is exhausted. The bulls are trying to come back, but every time that they make progress, the bears accumulate over them and bring it back, and the bulls have to start all over. So when things like this happen, it becomes extremely difficult for the bulls to climb in this particular case. Then the bears just obliterated them, really accumulated distance to the downside, had great projection to the downside. So we expected a pullback to structure. Now immediate structure is here and up here at this level. So price did that here, came back to this level, found resistance, and came down. Now look what happened. I'm going to scale in a little bit because this is where it becomes important and the reasons why I was looking for longs. We know there was accumulation here for sure. Then the bulls showed decent volume here, came back to immediate area of structure, and then the bears did what? Look at the volume here compared to the volume coming up. It took far less candles to get back down here to retest these lows, okay, than it did to go up. So this was further what? Accumulation, okay. versus what the bulls tried to do here. Okay, but the bulls were able to find some degree of strength to come up here, okay, and produce some value to come up and make a retest of this area where the bears came in again with what? Volume, right? And then the bears came back, retested this area here, and the bulls were able to what? They were not able to make another new structure high. Is this important in the overall grand scheme of things? No, but it tells us what? That if there was any strength to this at all, if there was any strength behind this, then price at the very least should have been able to break this high and close above this high. It was only able to test it. It means that this area right here is becoming increasingly strong, and there's what? Great ability to sell from that level. Okay. Pardon me. And then we see some massive accumulation again, okay, where the bulls try to come in here with no resolve, and then some more accumulation down to what? Consume and accumulate over the bulls. So what does that mean? It means that the bulls are going to have a hard time bringing price back up. And that becomes evident in what? When bulls are going to have a hard time bringing price up, we should see what? Smaller term swings, okay? Even if they're making new structure highs and higher lows, okay, it's not going to be something like this. It's going to be something like this, something labored, something hard to accomplish, okay? We already know this area is going to possibly act as resistance. We know we're in a range-bound market, okay, as we have the potential. We have lows being tested, we have highs being tested. This is the clue that price is telling us, okay, we may be getting into some sort of a range-bound market as we're testing lows and testing highs here. Okay, now price came back, tested lows, and now we're heading back up. Okay, but if we see the accumulation of orders, they rest on the seller side. So price is going to drop a lot easier than it's going to climb. Okay, so now I'm going to scale in a little more and get into the specifics of my trade. So having seen that, I see price come up here with some pretty good volume-based candles. But again, you got to ask yourself, okay, we have volume, but what is it doing? Okay, price comes up here, comes into this area. I identified this area because what? Resistance, resistance, support, okay, broke through it, resistance. Okay, so I identified this area early, and you saw it on my charts when I posted it. So price came up. Okay, I didn't feel comfortable taking the short here. Why? Because it did not get any rotation. Otherwise, I would have. Okay, I did not get the rotation. As you can see, there was no rotation here. Pardon me. So I let that go. Plus, there was a little bit of volume here, so the rotation had to be good. And if I would have gotten any trading above the high like we had here, even if this candle would have rotated, I would not have taken that signal. I do not like my rotation candle to trade above its open in this particular case. So regardless of that, okay, price came back down into an area of support, and price found support. Now, I wasn't particularly pleased. We had a small gap here on these candles, which indicated strength, okay, and good volume, okay. So I wanted to pay particular attention as to what price did up here. Okay. Also, I had a situation where price completed an ABCD pattern. Okay, in an area where imbalance should favor the bears, in an area where price is respecting the structure area. So I had all of these reasons to get short here. Okay, the only reason I had not to get short was this right here. But by the time price came here and retested this minor structure here, which initially concerned me, I didn't see much here. These candles were fought, and it was a struggle for the bulls, and they actually only produced this candle. So when this candle opened, right, they immediately got bearish and closed as well as it did. Without hesitation, I jumped into this trade. Now, it went against me a little bit. I knew that the immediate short-term order flow was getting bullish, that there was some strength there to the bulls, and that I needed to be patient and tolerant. Okay, and then the market rolled over a little bit here, found a little bit of support at the structure area that I predefined. Okay, and then came back up, and then eventually found a little bit of that imbalance and came in. Why did I get out here when my profit target was down here? Well, there was some volume here. There was an ability to come down here. This area has been holding overall. The market has been trying to push back up, but imbalance and the expectation rests on the bears to produce that new structure low. Okay, so I got short here based on this pattern completion, based on the structure. So my initial expectation is to trade this pattern here with the expectation that if price does accelerate, that I can trade the longer term, which is a new structure low. So we have this scenario, which you saw on my lines from today. Pardon me. I projected that to the downside. I also projected this to the downside. Okay, and I was looking out for this, and I was looking out for this. Okay, but like I said, we have a market that on the immediate shows strength to the bulls building. We see that overall we've been unable to achieve those new structure lows. Okay, we're in a complex correction. Okay, so I wanted to make sure that at the slightest sign of trouble that I would close this trade, as my goal was to trade this pattern, and if price keeps accelerating, no problem. Okay, I was up 21 points here, well 20 something points here, and I did not want to see that turn into a break-even trade when price can very easily find support here, because we have buyers, we have resistance, we have an attempt to buy, and we have some buying going on at this level. So once I saw price hit the profit target of this pattern, and I see this engulfing candle here, not a great rotation candle, because like I said, I don't like candles to trade lower, but this was enough of a signal for me to say, no, I'm getting out of this. And I took my 21 points. The goal was for price to try to come up again into this general area where I could then sell, depending on what I saw coming up. I never got that opportunity, and price came down to hit the bigger term pattern down here to the downside. And then I said, okay, well, I'm interested in this zone getting short again, and then by that time I had to leave. But those were the reasons why I got into this trade. That is the reason why I took profit here, and that's why I was looking for shorts. One of the things that we have to ask ourselves when there's volume is, who's accumulating over who, and who does it balance favor. And what is the overall expectation of the market? Don't get that tunnel vision to say, well, I've made a new structure high here, so I expect a new structure high. Well, is this new structure high a complex correction or a true new structure high? Okay, because at the end of the day, that becomes an important piece of information when you're deciding in which direction you're looking to trade. Okay, was this deeper than I would have liked? Is this a trade that had extra risk? It had less risk. From an immediate perspective, it had more risk because the market was strengthening against my direction. Okay, but because of that, it had great risk-reward profile. I cut my trade short for technical reasons because I was trading NABCD completion in alignment with the long-term picture, the best of both worlds. The only thing that concerned me was that this second leg had more strength and volume than the first leg, and that's kind of a deterrent for me in taking a trade. However, when imbalance favors the bears in this particular situation, when it does, and when I'm at a clear area of structure in line with the overall medium term and longer term expectation, well, then it's a no-brainer to look for that trade. But because you have initial strength going against you, you have to be patient and tolerant until you get enough of that imbalance to come in and help you out. Now, some of you also took shorts around here, okay, and got stopped out as price made new highs. But again, okay, we need to understand the dynamics of what's going on and what is the market working towards. Okay, we know that this is the clear high and this is the clear low. It sucks. It's a wide range, okay? But that is the main swing. And this is nothing more than a complex correction, and we expect what? A new structure low. Okay, this is an area of structure that has been holding both on the buying side, okay, and on the selling side, okay. So your stops, okay, at the very least has to be above this zone, ideally above this high. If you can't afford that kind of stop, well, then you enter with a smaller position, or you don't enter the trade at all. Putting your stop anywhere below this level here, okay, creates vulnerability for your stop placement, okay. As the market made another retest of the bottom, got past the highs a little bit, is that significant? It can be. It can be, but you're still within the realm of the expectation, which is a new structure low. Okay, and when the market can't come down, even though there's heavy accumulation, okay, the market sometimes, the sellers have to allow the buyers to get in. This why? Because they don't have enough orders. There's all of the orders are consumed here, and they don't have enough to create that imbalance. So what do? They need to come up higher to do what? Clear all the stops that are up here, okay, so they can get short, so that the selling can come in, okay, because you gotta, if you sell here, you gotta buy to close, okay, so you gotta come up. The buyers have to come up, and the sellers need to allow that to happen, okay. Then the orders get filled, and eventually you get what? That imbalance. And what does that imbalance do? Boom, boom, boom. Consumes all of this in very few candles. Okay? So what is the expectation? The expectation is still for what? For a new structure low. In the immediate, we've broken what? Structure to the downside. Came back to retest. Look at the volume coming back down. Okay? Price is going up. This is a new trading day. Okay? And we are going to likely see price at some point try to get near or past these lows again. Can that change? Yes. Okay, but again, the bulls have to start again from scratch, and we will see what plays out overnight. But those are the reasons why I took this short. Those are the reasons why, if you were short here, putting your stop right above there, although it looked obvious and reasonable, and there was still quite a bit of risk there, you're dealing with something that's a little bigger. You have to understand the dynamics and the context of where you're at and where your stop is vulnerable. So don't get mad if you got stopped out here. Okay, these stops needed to be clear in order to allow the orders to get filled that will create the imbalance, and that's just the way it is sometimes. Okay, if you didn't want the risk, then you could have not taken the trade, or you could have allowed yourself to get stopped out and then taken the appropriate trade in the appropriate place, made up the loss, and made some points. So there's different ways of handling those situations. I just wanted you to understand that I was one of those people that I was looking for a trade in this particular area, but I wasn't here to evaluate this, okay, and take the trade. So I hope this brings some clarity as to why I was looking for shorts and why some of you were looking for longs. And remember to always ask yourself, what is the market working towards? Okay, how does the order flow that I'm looking to participate in or trade, okay, complement what the market is working towards as a whole? Okay, and if you're going against that, then you know you need to be careful. Doesn't mean you can't trade against the bigger picture or against what the market is working towards. It just means that you need to be aggressive perhaps in your trade management. Only take on the risk when the risk reward justifies taking on the risk. Okay, those are the things that you need to consider more closely when you're going against what the market is working towards. Okay? But don't lose sight of what the market is working towards. Ask yourself, how does this complement what the market is working towards? And do I have room to protect my trade? At what point do I need to get to a break even? At what point do I need to protect my trade? At what point do I need to lock in profit because this is dangerous area for price and for my trade? All right. Well, that's it. That's all I have. Comment and let me know whether this video was beneficial. or if I need to slow down or explain things again in a different way. Thank you very much, and good night.